Hey everyone, and welcome back. Well, it's that time of year again. We're talking about earnings, and we've just seen the first big tech give us the report. That is Netflix. Did the market like it? Frankly, no, it didn't. Down 25% after hours. But with the risk-on move coming back to the markets, is Netflix enough to dampen the bullish run that happened in the last session? We'll be talking about that and more, and breaking down crypto, commodities, and stocks for you right now. Stay tuned. There's a lot to discuss. Well, welcome back everyone to our daily show here for the markets close 19th of April 2022. Remember, if you like stocks, cryptos, or commodities, please subscribe and smash that like button if you find value in today's video. Let's start off here by talking about the reports. Of course, Netflix missed. And who are they blaming? Households. Why? Supposedly we're sharing our passwords with everybody and they're going to do a crackdown on that. Yes, Netflix lost 200,000 subscribers for the first quarter, significant amounts, and the markets hated it. 25% plunge after hours. That's off the back of the previous massive plunge they had. Is it the end for Netflix? Well, it certainly could be the ceiling that we've seen happening over the pandemic highs. Now, let's also talk about what happened after that. Disney, Roku, Warner Brothers, Discovery, and Paramount, they all dropped significant portions, 5, 7, 5.5, big percentages dropping throughout the after hours. But in general, the day was risk on. I mean, it doesn't get better than this really when you're looking at the market and you're saying, are the bulls back? Overall, they were pushing every sector that they could think of except for really energy and a little bit of healthcare. So healthcare and energy didn't do so well. In general, the rest of them all doing amazingly. And it was just really the after hours that put a kibosh on most of these moves. You can tell it here because while the market opened, it rallied, it continued to rally, and it rallied into the close. That said that really Wall Street was behind this move as much as retail traders were. And we've got some good data to share with you about what the bulls and the bears are doing right now. Is it the time for risk on? Well, it could be very, very soon, and we'll be talking about that a little bit more later. Sectors that were doing well, it was a bit different. Retail actually breaking out here, up 3.75%. In the private stream we did, and even the public stream on Monday, we looked at Target, we looked at a few other retailers, and you know what? A lot of them had really great technicals. So it's actually surprising, but also not so surprising. That was one of the best sectors. Jets, one of the ones we have focused on here, and XLY, both out in the lead for the risk-on style day. Let's move across to some stats here. So in general, when everyone kind of gets less bearish or bullish on markets, that is fear and greed, markets tend to do better. And look at this reading here. So bullishness is less than 20%. And of course, as we're contrarians like this, remember Warren Buffett's famous quote about fear and greed, what ends up happening when we get a really low reading on this bullish percentage? Well, we tend to have really good runs. Remember, this hasn't happened for a little while. We had it here on the 17th of February. Now we're getting it again on the 14th of April. So is this the time that the bulls come back out? The percentages after 3 months, 6 months, 12 months have all been usually very, very significant. And it's certainly an interesting reading here when we consider how much kind of bullishness, then into bearishness, and how much the market's been manipulating, I guess, our beliefs and how everything else that's going on. Now, I've also heard a lot of people talking about the next recession coming to the markets and whether that's likely or not. Well, a lot of it is got to do with how many US Treasury yield curves have inverted. Now, we always talk about the US 2-year and 10-year and the 3-month and 10-year being the most important yield curve inversions. But what about thinking as a percentage of all the yield curve inversions out there? Have we had a lot of them? Well, the answer is no, we haven't. We've only had a small portion of the overall yield curves inverting. Think of this as kind of like the shot across the bow. Realistically, is the economy sick? Yes. Are the street telling us so? Yes, they are with inversion. But that doesn't mean that it crashes straight away. Remember, back in the 90s and 98 and all these times, especially when we had lower percentage readings, we did tend to have quite a long period of time between that and the market crash. In fact, that was about 3 years in between that period. So it shows you that maybe you want to be more careful, but overall, still the market could go up to all-time highs. It's very, very possible, even with that yield inversion. So we go into earnings, and as we know, there's some big ones coming up. Netflix was the first of the big tech, and it wasn't good. Will Tesla paved the way, or Snap paved the way towards something better. Tesla bulls were out. They were trying to push it through the resistance. They didn't quite manage to do so. We'll take a look at that soon. But Snap also coming in here Thursday after the close. And as we know, earnings really crescendos in the next 2 weeks. Massive technology stocks coming out, and you've got to be following the channel here or anyone out there to make sure that you're on top of all of these big earnings reports, because it's going to shape what really happens with the risk on, risk offness of these markets right now. Speaking of risk on, risk off, the fear index, the VIX dropped again. That is basically, we saw volatility drop out of the market. That's a positive sign for the bulls generally, and we've been kind of sitting in this range for a while. If we close below maybe 21, possibly that could be a good signal as well that the bulls are back in the markets and they're less fearful than you would think. I think a lot of this also times in well with the US 10-year. This thing is absolutely parabolic at this stage, and it's moving towards the long level that we have once thought that was going to happen. After we broke through to what became most logical, 3%. We broke and closed on 3% previously in 13. We did it in 18, and we did it again in the back end of 18. So is this going to be the first point where the US 10-year finds some resistance? Remember, the Fed's down here. The Fed's like, hey, what's up, guys? We're down here. The US 10-year, the market's all the way over here. And we've long suspected that the Fed will raise rates, of course, but while the Fed's raising rates and to a degree, affecting demand, wouldn't you think that the US 10-year might hit resistance and start to come back down? They meet somewhere in the middle, or they meet somewhere at a different level. That's at least the theory for now. Remember, people are talking about peak inflation has been hit. All of the worst things are out of the way. Obviously, you've still got the China stuff and Shanghai and lockdowns and all those types of things. But yes, 10-year here at 3%, hitting a resistance. If it starts to turn around, what's that going to be good for? Risk on, technology, those types of things. So watch the 10-year. We'll be following it here on the channel. PCC, put call ratio, sitting around 0.96. Doesn't really help us much today. Just kind of shows that there's an equal balance between the amount of puts and calls being opened in the market for the week so far. And if we move over to the DXY, that is the US dollar, we've seen a very steady bullish increase in here. That is mostly people fleeing other assets, possibly going into US dollars. And that's really maybe hit its target. So if you think about the current movement of accumulation into the next move and you take that out, it kind of just reached that target. So possibly now it starts to consolidate, and that again could be a bullish sign here for markets. It's certainly looking a little bit better than it did. Another big move that happened overnight or happened during the sessions was gold. And gold dropped from around that just under 2,000 an ounce. It dropped through one of the moving averages that it's found a lot of buying pressure at. So you'll see here, 4-hour 20, bang, bang, buying. And we did caution against going long here without seeing the confirmation. That is, without seeing the market, really break through this 1980, 82 area or zone. It didn't do it. It made a new low and it collapsed, which is pretty consistent with, unfortunately, what does occur during these things. It got so close to our 61.8. That was our target. Between here and here was obviously our target. And you'll notice that if I actually drew this correctly, I think it got within $2 or something of the 2,000, which was the target. You always should be taking your profits slightly earlier. Never go for the round number. That's just a rule. It just makes sense as well. If you have a stock and you're aiming for $100 for the first time, wouldn't you be better off taking off at 98, 99, 50, something like that? In general, markets will stop before the round and drop. It's part of all of the trapping that they do. So gold for now becomes a little bit less clear. It is sitting on previous resistance being support. You would totally expect this area for it to consolidate for now. Oil also took a hammering. It sold off the 108 resistance and fell back down. If we go to the 2-hour chart here, we've been kind of bullish on oil the last couple of days. It is going to suffer if the US 10-year comes down. Remember that as well. So US 10-year still going up. For now, I would say oil is on an okay support. Not necessarily super strong, not super weak. You'd need to drive down to the smaller time frames, look for the consolidation. And of course, if we get the breakout past 104, that could resume the upward trend. So oil traders here, that's what they're really looking for. Let's move over to Tesla. So as we mentioned, heading into the big earnings, we're basically at resistance. 1,028 is the close, 1,026 around that area is the resistance. So we close on resistance and we close right at the zone that we expect problems to occur. We've got now really just only one thing to wait for, and that's news. If news goes bullish, well, you know what's going to happen next. The big bulls are going to come out to play, and we've already seen in the options that there's a lot of calls being opened by retail traders. 1,050, 1,100, and 1,150 being the favorite strikes of the retail traders towards the bull side. I'm not sure how it's going to go. The market doesn't seem to know either. It's just coiling. And really, at this stage, unless you have some insider information or whatever else, you're kind of gambling with what you think. Now, you guys know that. Some of you will have strong conviction, and fair enough, towards the bull or the bear side. But the price action at this stage, you'd be waiting for after earnings to figure out whether it goes bullish, then hopefully it pulls back and gives you a way in, or whether it goes bearish, pulls back, gives you a way in, that kind of thing. We'll watch this over the next 24 hours. So we mentioned Netflix, and Netflix opened on its support. So it opened right at the support. It rallied a little bit during the day, trapping, I guess, a lot of people. Maybe people didn't expect such a bad result, and then earnings has come out, and I would expect this to be one of the most down stocks in the next opens. Basically, we'd probably open somewhere around in this area here, and it's going to open underneath. If it does rally, where do short sellers come back in? Previous supports will become resistance. So just be careful here. Netflix is going to be incredibly volatile. And remember, buying the dip works until it doesn't. So if you bought the dip last time around, did it really work? Well, it went down further, then it rallied. If you got out, well done to you. But it didn't fill that gap, yeah? So you've got to be very, very careful about buying the dips on these stocks. We always caution against that kind of thing. It can be very, very dangerous. Netflix will open up down below, though, almost assuredly. Let's move over to XLY. So this is something that we mentioned in the last video that could be showing us risk on. So this is consumer discretionary, basically the American consumer. We're seeing retail doing better. Interesting. It's coming back. Some of those stocks starting to really move around there. We've got the left shoulder here. We've got the head. We've got the potential right shoulder and the neckline coming through the 190. It's done the first good sign of risk back on. That is break through this 182 area. It closed at 184. So will this continue to rally? That's the question. This is risk on in its, I guess, simplified form of one of the sectors in the market. It does have a massive inverse head and shoulder on it, and bulls are going to be very excited if they can make it break past 190. That would certainly be a big positive here for the markets. At this stage, it looks like the main trade of the last 24 hours anyway has been risk on. And if maybe Tesla can hold up and we see Snap do better than these Netflix positions, then this could continue. And that's going to be something that we need to watch. It's all about earnings at this point, and price action is just going to continue to follow that general trend. Remember, beats and misses will become a storyline that we bring into this channel moving forward. IWM, the small caps, playing with the resistance here of the daily. We've seemed to have rallied off that 196 a few times. We've formed a resistance around the 201 kind of 80 zone, the 20 moving average here on the daily. We break through that, another good sign that risk is back on in the markets, and we move towards that 208 then at that point for IWM. Certainly a much better sign here for the bulls, though we are at resistance heading into, of course, another trade day. Let's move over to the Nasdaq. What did it do? Well, before the Netflix horror announcement that pushed it down, it actually closed at the resistance. It was pretty good. We're clearly in a bit of a channeling zone. That is, the market is unsure of what it wants to do, and it's waiting for the news to push it through. Some people will claim this is a double bottom, and they'll say, look, double bottom, we break through this point, and then it's risk on. I would tend to agree with them. Basically, since we saw the peak, the trough, the lower peak, and the lower trough, what do you think, guys? At this point, it was basically sell every rip. Every rip, every previous support became sell. Very evident on the SP 500. If we breach through and close above this kind of 14,000, let's call it 14,280 area, 14.3, then what happens? We've created a double bottom. We've effectively gone long. And then it seems to be buy every one of the dips from that point on in terms of risk on, risk off. So it's a very important point here for the bulls and the bears. If the bears get it back under, oh, it's sell the rips. You know, that's what it is. They've really won it over. But such a critical area and very important for us to watch. At the time of this recording, you'll notice that the market came down a little bit. That is, It's gone back down to 14,082 after the Netflix earnings, and it's kind of hovering in the middle, really waiting probably for Tesla and other stocks to show us the way. And that's probably the biggest problem here. It's waiting for information or for news. The SP500 is very similar. If we take a look here, we had that double bottom in the previous video we're discussing. It broke through that 4410, and we also had a 4420 on the futures. That then led to the idea that we would move to 4460. We did. We've hit that level, and then we found resistance. And now at the time of the recording, we're trading around 4447. So we're still pretty high. But if we breach past this, again, what happens? The sequence of shorting stops. So at the moment, it's been peak, trough, lower peak, lower trough, short, ripped, sold the rip, sold back down, ripped back up, previous support, sold the rip, sold the rip. Do we sell the rip again? If we go bullish here, what do? We're breaking the sequence of selling the rip. So suddenly the bulls are back, and the whole dynamic of the market changes. So this is a very critical point here in the markets over the next 24 to 48 hours. And of course, ideally for the rest of the earnings season. If everything starts disappointing, where do we go? If we go underneath this, oh, it could be sell the rips, very bad. So the bears would be hoping for selling at this point. The bulls are hoping to push it through. A very important area to be watching over the next 24 hours. Let's bring in some max pain concepts here. So for the market to be happy, if they closed it on the 20th of April at 440, that would be a pretty big deal for them. Obviously, that would be the perfect close. On the 22nd here, if they closed it at 445, that is right where it pretty much is right now, they would make the most amount of money. Now, they've been pretty good at doing this each and every week so far. They've actually done it for the last 3 weeks, almost to the point. So we'll continue to watching this. No updates yet on what happened with the puts and calls. They seem to be pretty simple or pretty similar. But every day, check these types of things, see whether it's going up. If this becomes, let's say for the 22nd, 450, then it makes sense that we're probably going to break to the upside, and a lot of this risk on is going to occur. So max pain, something we are watching over the rest of the sessions. Let's move over to crypto quickly here and talk about crypto. Basically, the Bitcoin halving is one of the events that I still think and I still believe will occur again. You can't expect for Bitcoin to always get these types of insane returns. Of course, you've got to remember one of the things that's problematic here is that when you go from 10,000 and suddenly you're expecting it to make the same types of returns as it did in 12 or it did in 16 or any of those times, you just can't do it. But what does tend to happen is it has weakness between that kind of 550 days to possibly even 950, 1,000 days. And we're at the point here of about 700 days after the halving. It is weak. And depending on what happens, let's say we have risk on in the markets. Let's say we do get the Nasdaq comes back. I would say that Bitcoin will flick into gear. But keep in mind this longer term process. If we continue to weaken and we're in some kind of crypto winter, between 900 and 1,000 days after halving, we might find a low that could become very tasty for investors, for traders out there. It's just something that's happened in every other one of the halving events, something that I think we'll continue to discuss here on the channel. Let's talk about Bitcoin. Because of Netflix, in some ways, I feel like Bitcoin's hovering at the resistance, waiting for more risk on to come in from the markets. We've got the max pain kind of concept. That is a movement below the previous lows and below the trend line, quickly purchase back up on the daily, creating a bullish hammer. And we're at the resistance here around 41,500. So a break above this, where do we go next? You would think around that 45K. BTC looking better than it has done. BTC shorts, this is big whales, nasty whales. They're slightly raising the odds here of the short conditions. So not necessarily a great thing here for buyers. Basically, we don't want to see this spiking. If this is spiking and at the same time Bitcoin's going up, that's counterintuitive. Generally, you want Bitcoin shorts going down and Bitcoin going up. Remember, we don't try to fight the whales here if we can help it. Ethereum is very similar. It's basically just right at around that resistance, a breakout of 3150, and that's going to be a nice kind of bullish intention. And again, you can see here the max pain where the market went down and quickly rallied off that low. So it really looks very similar to the stock markets right now. Risk on, risk off. That's what really we're discussing. Remember, news ahead. If you're going through the news, you've got still some information. You've got the Papa Powell coming out on Thursday at 1 p.m. New York time. And then we keep scrolling through. Plenty of information coming out from the Euro from pounds, from obviously other countries, but the US is really an earnings season, and it's all about Tesla now and Snap. So far, disappointment. Strike one. Netflix did not do well. Let's see what the rest of the tech continues to do. Thanks so much for watching. If you enjoyed today's video, please subscribe, smash that like button. We'll see you in the next one. Bye for now.